friends, welcome back to Wall Street in Europe. Today we've got a massive update. The hottest global financial news, deep dives into Apple, Meta, Tesla, Walmart, Samsung, and more. We'll cover everything shaking the markets right now, from central bank policy and AI breakthroughs, to record-breaking profits, and Wall Street's biggest bets. So let's dive in. Federal Reserve Chairman Jerome Powell has just raised a serious red flag. He warned that the U.S. labor market is weakening. Job growth is slowing, workforce participation is weaker, and fewer Americans believe jobs are easy to find. Because of this, the Fed may be ready to cut rates again. At the October 28th to 29th meeting, another reduction could come, the second one this fall. Most Fed members now support further cuts, and investors expect rates to drop by another 50 basis points before the end of the year. Powell's words were sharp. There is no risk-free path. The Fed is shifting its focus from fighting inflation to protecting the labor market. Yes, inflation's still at 2.9%, above the 2% target, but Powell insists much of this increase comes from tariffs, not from deeper economic forces. The next big milestone is October 24th, when the new Consumer Price Index report will be released, and it could shape the Fed's final two meetings of the year. Big news in retail and AI. Walmart has just announced a partnership with OpenAI, allowing customers to shop directly inside ChatGPT. Here's how it works. You chat, you ask for a product, and with the new instant checkout feature, you can buy it without ever leaving the chat. For shoppers, this is revolutionary. No more endless scrolling through websites, just a simple conversation and your order is placed. For Walmart, it's a bold bet on the future of e-commerce. They're calling it an AI-first shopping experience. And Wall Street liked the move. Walmart's stock jumped right after the announcement. But there are questions. How secure will payments be inside an AI chatbot? Can ChatGPT recommend the right products without errors? And what about Amazon and other competitors racing into AI shopping? Still, one thing is clear. Walmart is moving fast to lead in the next era of online shopping. The future of retail may not be a website or an app. It may simply be a chat. Imagine this. An analyst has just called Tesla a stock you simply must own. That's the verdict from Melius Research, which launched coverage of Tesla with a BAP rating and a bold price target of $520. Why so bullish? First, Tesla isn't just a car company. Analysts say it's the best real-world example of artificial intelligence transforming an industry. Autonomous driving is basically AI on wheels. Second, Tesla has something most rivals don't: vertical integration. While other car makers rely on suppliers, Tesla controls its own production, batteries, software, and even its own chips. That means it can move faster, innovate quicker, and scale more effectively. Third, Tesla is part of Elon Musk's entire tech ecosystem. Tesla, SpaceX, xAI, all feeding into each other with talent, data, and innovation. Now the risks. Even Melius admits Tesla's valuation is still speculative. Margins are under pressure, competition is heating up, and regulators could slow down autonomous driving. But despite all that, their call is clear. Tesla is a must-own stock in the AI era. So what do you think? Is Tesla really the future of AI mobility? Or is it still just an overpriced car company? Big news in the AI chip war. Oracle has just announced it will deploy 50,000 AMD AI chips starting in 2026 to build a massive public AI supercluster. This is a big deal. Until now, NVIDIA has completely dominated the AI chip market, but this order shows that AMD is stepping up as a real challenger. So what does this mean? First, a supercluster isn't just a bunch of servers. It's a giant network where tens of thousands of GPUs work together to train and run next-generation AI models. And Oracle will be the first hyperscaler to offer public cloud access to such an AI supercluster built on AMD chips. Second, this is a credibility boost for AMD. Getting a deal with Oracle signals to the market, we are not just the underdog anymore. We can compete with NVIDIA. AMD stock even jumped 3% after the news. For Oracle, it's strategic too. They're strengthening their cloud services and attracting AI startups and enterprises that need huge computing power. Of course, there are risks. The details of the deal, the costs, the margins haven't been disclosed. And building a system of this scale is no small task. We'll only see the full impact starting in 2026. But the message is clear. The AI chip war is no longer NVIDIA's game alone. AMD's officially in the fight. Nobody expected this. Samsung Electronics just shocked the market with a massive profit forecast. Thanks to the AI boom, their stock is now hitting record highs. Here's what happened. Samsung announced an operating profit of around 12.1 trillion won. That's about 8.5 billion for the third quarter. That's a jump of more than 30% year over year and way above what analysts were expecting. The secret? It's not just NVIDIA or AMD riding the AI wave. Memory chips, DRAM, and NAND are in huge demand. Every AI data center needs enormous amounts of memory to train infant models, and Samsung is the world's biggest supplier. Prices for these chips have surged, supply is tight, and on top of that, Samsung just struck a major partnership with OpenAI's Stargate project. That deal alone has boosted investor confidence that Samsung is now part of the core AI ecosystem. The result? Samsung's stock in Korea is trading near historic highs, and investors are rethinking the idea that only GPU makers benefit from AI. Memory storage infrastructure, they're all critical. So here's the big picture. The AI gold rush isn't just about GPUs, the shovels. It's also about the fuel, the memory that keeps everything running. And right now, Samsung looks like one of the biggest winners. Big news from Stockholm. This year's Nobel Prize in Economics goes to Joel Mokyr, Philippe Abillon, and Peter Howitt. And the reason? Their groundbreaking work on creative destruction. Now, what does that mean? Creative destruction is the idea that innovation doesn't just add to the economy, it destroys the old to make way for the new. Think about it. The smartphone replaced cameras, MP3 players, even GPS devices. Streaming killed DVDs and Blockbuster. AI today is reshaping entire industries. That's creative destruction. Abillon and Howitt actually built the math on this back in 1992. They showed how companies compete by innovating. The winners push technology forward while the losers fade away. Mokyr added the historical context, showing that culture, education, and strong institutions are what allow innovation to really drive long-term growth. But here's the twist. Creative destruction isn't painless. It creates winners and losers. Old industries, old jobs, even entire regions can get left behind, and that's why policymakers face a constant challenge. How to let innovation flourish while still protecting people from being crushed by the change. So why does it matter today? Because we're living through a new wave of creative destruction. AI, automation, green energy, they're all rewriting the economy in real time. And Nobel Committee's message is clear. Growth doesn't happen automatically. It happens when societies embrace change, manage the risks, and let innovation reshape the future. Big news in global finance. BlackRock, the world's largest asset manager, has just set a new record. Its assets under management have climbed to $13.5 trillion. To put that in perspective, that's larger than the GDP of China. It's nearly half of the entire U.S. stock market, and it's all controlled by one company. So how did they get here? In the third quarter alone, BlackRock attracted about $205 billion in new client money, most of it flowing into their famous ETFs, the iShares funds. Investors are betting big on passive strategies, even in a volatile market. But there's more. BlackRock is also expanding into private markets. Infrastructure, private credit, alternative assets. This is key because it reduces the reliance on traditional stocks and bonds, and it opens up new long-term revenue streams. What does this mean for the market? When BlackRock moves, the world feels it. With $13.5 trillion in assets, their influence over capital flows, corporate governance, and even governments is massive. Critics warn it gives one company too much power, but investors see it as a sign of strength. BlackRock is now bigger, more diversified, and more dominant than ever. So the question for you, does BlackRock's size make global finance more stable or more risky if too much power is concentrated in one place? Big move from Wall Street's biggest bank. JPMorgan has just announced a new initiative investing up to $10 million into U.S. companies tied to national security and strategic industries. They're calling it the Security and Resiliency Initiative. And it's part of an even larger 10-year plan to channel $1.5 trillion into America's most critical sectors. So what's the focus? Number 1, supply chains and advanced manufacturing. Number 2, defense and aerospace. Number 3, energy independence and resilience. And finally, strategic technologies like AI, cybersecurity, and quantum computing. CEO Jamie Dimon says the U.S. has become too dependent on unreliable sources for critical materials and production. This plan is meant to bring that strength back home. Now here's why it matters. JPMorgan isn't just managing money anymore. It's stepping directly into the arena of national strategy. When a bank this large, with trillions in assets, puts money into defense, energy, and AI, it sends a clear message. America First is no longer just politics, it's big finance. Of course there are risks. One bank managing so much capital in strategic sectors raises questions about transparency and concentration of power. And execution will be easy. Defense and tech investments can take years to pay off. But the signal is clear. The world's biggest bank is betting that the future of American strength lies in secure supply chains, cutting-edge tech, and energy independence. So there you have it. Today we've covered everything, from Powell's warnings and possible Fed cuts, to Walmart's AI shopping revolution, Tesla's must-own status, Oracle and AMD entering the AI chip war, Samsung's shocking profits, the Nobel Prize on creative destruction, BlackRock's record size, and JPMorgan's America First bet. The world of finance has never been moving this fast or been this unpredictable. Now I want to hear from you. Will gold, AI, and Tesla keep driving markets higher, or are you staring at the next bubble? And what do you think about Walmart's AI shopping? Future of retail or just hype? Drop your thoughts in the comments. I read every one. Don't forget to like this video, share it with friends, and subscribe to Wall Street Europe so you don't miss the next big update from Wall Street and beyond. Thanks for watching, and I'll see you in the next one.